Hello everyone, welcome back to the channel. I'm Trading Co and welcome to the Ultimate Advanced Price Action course. So without further ado, let's get into the video. So what is the supply and demand? Supply and demand in trading is the fundamental economic principle that drives price movements in financial markets. It is based on imbalance between the amount of an asset available, which is called as supply, and the desire of investors to buy it, and we call it as demand. So first let's talk about what is a demand. Demand is the willingness of buyers to purchase an asset at a particular price. When demand is greater than supply, the price tends to rise. As you can see here, when price gets more demand for the asset, the price will skyrocket, and the same opposite goes to the supply. Supply is the willingness of sellers to sell an asset at a particular price. When supply exceeds the demand, the prices fall. And demand zone is an area on a price chart where buying pressure has historically been strong enough to reverse a downward price trend. Traders identify these zones to signal potential buying opportunities, and supply zone is an area on a price chart where selling pressure has historically been strong enough to reverse an upward price trend. Traders look at these zones for potential selling opportunities. Now, let's talk about how traders can use supply and demand. Traders use supply and demand analysis to identify key price levels where the market is likely to change direction, helping them decide when to take entry or exit a trade. First, identifying the zones. Traders analyze price charts to find areas where the price previously made a sharp move. So here you can see that the price have made a sharp move to downside. So what we do? Okay, it seems we have lost the example. Now let's look at another example and actually tell you what is the supply and demand is. It seems for the internet connection I have lost. Okay, here we have found an example. Here you can see from here there is a sharp fall in the price. So what we do? We will draw this before candle or this red candle as our supply zone. It is important to draw the supply zone from where the price momentum started to fall or rise. So here you can see, here we have drawn this supply zone. So what we do after we draw a supply zone, we will wait for the price to actually retest this zone and get reversed from it. And here you can see that the price actually came to retest this demand supply zone. So what we do, we wait for the price to actually reverse from this supply zone, and you can see here that the price actually got rejected. So what we do, we will take entry here with stop loss above the supply zone and target at this previous low. And this is how the supply works. Now let's look at demand. Okay, here you can see the price actually given a big move to upside from here. So we are drawing this red candle full body as our demand zone, and here you can see that the price actually came inside the demand zone and got reversed. So what we do, we take entry when the price got reversed with stop loss below the demand and target at this previous high. Now let's go into the details of how to trade supply and demand and how to actually spot the supply and demand zones. So now let's start with how we actually draw the supply and demand zones. So let's say that the price has been rising and all of a sudden we have gotten a huge move to either upside or downside. Here let's say we have gotten a quick move to downside, and what we do actually is that we need to find the cause of the first candle that led to the sudden move. So here this will be the first candle that has been captured or will be drawn as the supply zone, and that entire candle body will be counting under the zone. So here this is our supply zone. So what we do, we will wait for the price to come to this zone and get rejected from it from here. And when the price does, we will or we have to take entry here with stop loss above or at the supply or demand zone, and with target of either previous swing lows or highs or support and resistance. The same goes to the demand zone. Now let's actually find some real examples and we will talk about what to do when a supply or demand zone breaks and how we can trade them. So now let's find one example. Here you can see the price given a surge move to upside. So what we will do, we will be drawing this entire candle as our demand zone, and we extend this box, and here you can see that the price got rejected from here. So we will be taking entry here with this candle getting rejected with stop loss below with buffer points and target at this swing high, and eventually the price did hit our target, and you can see I have drawn the zone for this one candle only. It is important that you must draw that zone to that one candle because it is the candle that led to the price rise or fall, and here this candle led to the price rise. So we will be drawing this as our in an we will be drawing this candle as our initial zone, making sure that here that the buyers are stepping in with their limit orders. And now let's go to supply zone. Okay, here we have spotted a supply. So we'll be drawing to this candle as our supply zone. Make sure that this is the cause of the price fall. We can even draw the supply zone to this green candle. Let's say we have drawn this as our supply, and here you can see that the price given an entry, but it was very few points to actually capture. So most of the times some traders will draw at the beginning of the fall of the candle. Here this is the beginning candle of the fall, so we have drawn the demand supply zone to this candle. You can either draw to the previous candle or the starting of the trend candle. Here we have drawn to the starting of the trend candle, and you can see that the price have given a fake breakout here, and price ended up closing below the supply, and we have taken entry with stop loss and target as 1:1. Now let's see what to do if a supply or demand gets broken. Let's say okay, here we have found a demand turning into supply. So here you can see from here the price given a big move to upside. So this will be our demand zone. This area is our demand zone, and you can see that the price actually ended up breaking and closing below the demand zone. This indicates that the sellers are way more stronger than the buyers, defeating them in the war and taking control over the market. And you can see that the price actually came to retest the demand zone, which I have now converted as a supply. And you can see when price come to retest the supply or the converted demand zone, you have to take entry when price came to the retest and gets rejected. Here the price actually came to retest and getting rejected, so we'll be taking entry with stop loss and target of these levels. These are our entry position, and you can see that the price actually hit our target. So what happens when a supply or demand gets broken? When a supply or a demand zone is broken, it signals a significant shift in market sentiment and can present a new trading opportunities. The price breaking through a previous strong zone indicates that the pressure from the opposite side have becoming stronger. So here in this situation, our demand got broken. So this indicates that the trend is weakening. A demand zone represents an area where buyers were previously strong enough to reverse and a downtrend price move, but when the price breaks below this zone, it signals that the buying pressure has been exhausted and sellers are now in control, which is a signal of a weakening trend. And there comes the new selling opportunities. The breakout can be a signal to a new sell trade, especially for breakout traders. As I told you, you can actually even take entry when the price actually broke this demand zone. Okay, I haven't mentioned that, but I'm telling it again. You can actually take trade when price actually breaks the demand or a supply zone, and you can capture the move of the breakout. And here the price actually hit the target of both, and that's simple it is. You can actually trade supply and demand for breakout trading too. And the failed support has now become a resistance. In some case, a broken demand zone or a previously a support level can flip and act as a new supply zone. Just like you are seeing right now, the support have now become a resistance and made the price fall even further. So now let's talk about how to trade when a supply zone gets broken. Okay, as you can see that the chart is in downtrend and have been converted to uptrend. But if you look closely, you can see that this is our supply zone and the price ended up breaking it and closing above the upside. This indicates the trend is strengthening. A supply zone is an area where sellers previously reversed an upward price move. The break above this zone signifies that buying pressure has overwhelmed sellers, suggesting bullish strength. Now, here comes the new buying opportunity. This breakout can be a signal to buy as the price is expected to continue moving higher, and this failed resistance now becomes a support. A broken supply zone, previously a resistance level, can flip and act as a new demand zone. And when the price retests it from above, the price will eventually respects the level and reverse to the corresponding side. And the important considerations is that the strength of the zone. The more times a zone is tested without the breaking, the weaker it becomes. So let's say, okay, let's talk about the important considerations when trading a zone. So first, the strength of the zone. The more times a zone is tested without breaking, the weaker it becomes. So here you can see that the price have tested multiple times, and all of a sudden the price actually, instead of reversing from the supply, it broke into the upside. Instead of reversing, the price actually broke the supply zone, and this actually considerates that the more times a zone is tested without breaking, the weaker it becomes, making a future breakout more likely a rapid breakout, which suggests a powerful shift in the supply or demand balance. Let's say now, instead of price reversing, it actually gives a false breakout instead. So what does it mean? A breakout with low volume may be a fake out. So we need to consider when the price was about to break a supply or demand zone, make sure you watch the volume. If the volume is high, then consider it as a valid supply or demand break, where the price briefly moves past the zone but quickly pulls back. Volume confirmation is important for validating a breakout. And now let's look at real lifetime examples on how to trade supply and demand, and how to trade the breakouts of supply and demand and avoid false breakouts. Okay, let's go to another stock called TV Sunday. Okay, let's go to Berkshire Hathaway. Okay, we are in Google stock and you can see, let's find a supply or a demand zone. Okay, we aren't able to find any supply or demand zones in the Google, so let's just find one in currency. And here you can see, okay, this is not a valid zone, so let's find even further. And okay, here we have found a demand zone. Here you can see price given a quick move to upside, so we will draw the previous candle or the candle of course as our demand zone. And here you can see, for confirmation, let me add volume. Here you can see I have added the volume, and you can see that the price didn't given a strong volume to break or to validate the breakout. So what it did, it ended up closing above the demand and resulted in a fake breakout. So what we do in these situations is that we need to take entry when the price crosses above the demand. Here you can see that the price crossed above, so we take entry with buffer points to the previous low and target at swing high, and price did hit our target. So now let's find another example for the supply, and let's see how we can trade when the price given a false breakout. And here you can see we have spotted a supply zone. So what we do, we draw at the beginning or the starting of a supply zone, and here you can see that the price actually didn't got rejected from here. It just given us a small move to downside but ended up breaking to upside. So what we do at this situation is that we here you can see that the price actually given a volume confirmation too, but for some reason the price didn't supported the reversal, so it ended up giving a big move to downside. Sorry, a big move to downside in volume. You can see that the fast reduce in the volume, and here you can see that the price got reversed from the point of low volume and got reversed to upside. So what we do, we take entry here when the price closed above the supply zone, which have now become a demand zone, and we take entry with stop loss below buffer points of demand and target at 1:2 or at previous levels. And you can see that the price did hit our target. Sometimes you can even find small supports like here. You can see this is a small demand zone, but the price did reacted to the demand zone either way. Here you can see that the price given a big move to downside, but then came to the demand zone again, but this time it didn't came inside the demand zone. Instead, it just touched the tip of the demand and got reversed. It is also important to make sure that the volume is actually supporting. Here we don't have any confirmation, but we can still take entries if the price shows momentum. Here you can see, as I told you in my candlestick video, when price when you read the price action, you can actually confirm whether it's the buyers or the sellers taking over the market. So with that being said, we will be taking entry here at this candle, because you can see sellers tried to take down the market, but buyers ended up taking it upside. And you can see again that the sellers got below, but buyers again made the price move higher, and this time they won. So we'll be taking entry with stop loss with buffer points below the demand and target at this supply zone. Here you can see this is also a supply zone, but it also ended up breaking. Here you can see this will be our demand zone, and here the price given a false breakout, but the supply is not strong enough for the price to react, so it ended up being reversed again in this one big candle. Now let's actually talk about how to trade, no, how we can avoid fake breakouts or false entries. Isana, ఇస్తానా ఇదిగో ఏంటి. If you notice, you can see this is a demand zone. Why? From this point of area, the price started to reverse and given a big move to upside. So we'll be drawing this. We'll be drawing this candle as our demand zone. And if we extend this, you can actually see that the price actually got reversed from inside to the outside and sustaining above the demand. And you can see here the price broken. So we take entry with buffer points of demand and target at either swing highs or at this weak supply zone. And you can see the price did hit our target, and you can notice that the price again came to retest this zone and it successfully got reversed again. So again you can take entry here with the candlestick theory and with stop loss same as before and target this time at this level or this high. And eventually the price did end up hitting the target. Here if you notice, from here the price again got reversed to the upside hugely. So we'll be drawing this red candle as demand, and you can see the price given a false breakout. So what you need to do when price gives a breakout and you don't know whether if it's going to sustain or is it going to be a false breakout. So what I suggest you to do is, when a breakout happens, make sure that the price retests this level and reverses again. Here the price came to retest and tried to break or sustain below the demand, but it failed and closed and closed above the demand. This indicates this is a false breakout. So when a breakout happens, make sure that the price will eventually get reversed by retesting it again, or make sure there is a momentum or volume confirmation. Here you can see there is no volume confirmation. Here you can see that these three candles had volume, but on the next candle the breakout continuation candle didn't had the volume. So we will leave it where it should be, and we will wait for the price to eventually close above or get retest and get rejected again. And here this happened, so we'll be taking entry when price closes above, and it did. So we'll be taking entry with this candle at buffer points of demand and target as this zone. Here the price did eventually hit our target, and you can see this also kind of a supply zone, but it didn't actually ended up. Here you can see that the price actually crossed above. Here it didn't even mentioned or notice that there is a supply zone, and you can see that the one single candle have tried to get rejected, but it failed, and leading the buyers to eventually break this supply and close above it. And you can see the price tried again, but buyers ended up dragging the price higher and closed above. So what we do in this situation is that we'll be taking entry when price sustains above the supply, which is now have become demand. And with this we'll be keeping our stop loss with buffer points around here and target at this high or at resistance levels, and the price eventually given as a big move to upside. And that's all for this videos, guys, and tomorrow we'll be explaining about supply and demand, which will be even categorized into order blocks and mitigation blocks. So the next video is about order blocks. And that's all for this video. Check out our younger or older videos which is about support and resistance and candlesticks. And don't forget to like and subscribe.